Origins of financial advice is what I want to talk with you about, the origins of financial advice. And what I want to do is I'll go back in time a little bit to share with you where financial advice originated from and why we've got lots of these mis-selling issues and scandals coming through the system. So I want to share those with you. Okay, so let's pop over to a whiteboard for this to kick off with, so you get a few ideas up on the board. So let's do a bit of a timeline for you. And so what I want to do is to share with you what's happened over the last 50 years. So there's my little timeline for you in financial advice. So we've got here the 1970s, for example. We've got the 80s. We've got the 90s. We've got the noughties, which looks a great word, isn't it? The tens or the teens, and of course we've now got the 20s. So we've got 5 decades of financial advice being given. So what used to happen back in the day? Well, prior to 1970, there was financial advisor. Prudential's been around for years. So, but they weren't very publicised, and they were the only people doing the selling. It usually came from insurance companies. So what you had were a number of life insurance companies, the Prudential, Legal & General, Standard Life, who had their own sales forces of highly professional, educated people who went around the world knocking on doors, selling the products of those insurance companies. You had this demarcation back then where banks did what banking did, lending to businesses and people. Building societies did what they did, mortgages. Insurance companies did what they did, life assurance, investments and things. And never the twain shall meet until the 80s, when they revolutionised the market and everybody started to do everything else. And of course the rest is history. So you had no regulation back then either. That's important. Was there a need for it? Yes and no, but people tended to do the right thing back then. It was slightly different. There wasn't anything dangerous going on at all until the 80s came around. And what happened in the 1980s is we had this huge increase in sales forces. And I call them that exactly because they were sales forces employed by the insurance companies predominantly to sell the products of that insurance company. So they were tied agents. And they were mostly commission-based sales forces, easy to recruit. There you get 2 S's, isn't it? Easy to recruit and easy to motivate, really, because they were motivated by selling, which caused a lot of the problems. Because at the same time, you had more and more complex products coming in. You had different types of endowments coming in, all sorts of complex products, which a lot of these people weren't trained very well on, and which caused a lot of the issues as well. And these massive untrained sales forces roaming the land, doing their thing, if you like. Now, as a result of that, some mispractices were going on, of course. Somebody who has to sell to earn their money is going to sell. It's the way it is. Commission drives behaviour. So what do we have in the 80s? Well, first of all, we had our first Financial Services Act, didn't we? Financial Services Act of 1988. It was 86, but it came in 88, which was the first regulation, and that started to regulate the environment. It got some teeth later in 1994 with training and competence, which made exams compulsory, and that started to educate the sales forces. And the sales forces started to shrink a little bit as time moved on. You know, the world was changing on that as well. In the early 2000s, we started to have mortgage regulation, of course. Mortgage regulation came in 2004, so that's 21 years ago now. Up until then, it was never regulated at all. Well, because it wasn't. It's crazy when you think about it. Then we had one of the biggest changes in 2012. We had RDR, the Retail Distribution Review, which banished commission. I personally think commission is one of the biggest issues that causes mis-selling. If somebody needs to fill the fridge and feed the kids, or do the same thing the other way around, then they need money. If they're on commission only, they have to sell, which often it breeds practices where more sales are done. This is the way it is. Now, Retail Distribution Review abolished commission for financial services products, wealth and pensions and stuff like that. However, commission's still there for proc fees. Mortgage proc fee is a fancy word for commission, and we also have commission on life and protection. Now, does that cause a problem? I don't know. I'm not going to suggest it does. But if somebody is purely on that, that's commission only. However you look at it, whether they're self-employed, employed. If they earn money by proc fee and commission, they're commission only. If they don't charge a broker fee, which is for their time, then they are reliant entirely on commission. So the more mortgages they sell, the more money they earn. Whether that's causing any issues, I don't know. The fact is we are much heavily regulated now and supervised, which is preventing these things happening. But as a result of this history, if you like, what's been going on here, we have had some mis-selling scandals. Let's talk about those, shall we? Because, they're pretty interesting things, aren't they? Mis-selling scandals I want to take a look at. Some of the scandals that we've had over the last few years. You're probably aware of these, you've probably read about these. Let's take a look at some of these, these mis-selling scandals. Let's just pop on in so we can see me as well. There we are. First of all, we've had pensions mis-selling, 80s and 90s. Then we had endowment mortgage mis-selling. We had the big PPI one, of course, and recently, the hedging interest rate one. I'll tell you about in a second. So pension mis-selling. A couple of things. There are thousands advised to transfer out of their defined benefit schemes. Many lost guaranteed benefits, ending up worse off completely. That was the pensions mis-selling, which occurred in the 80s and 90s. People in their company pension scheme being told to come out, which is just the wrong advice all round, really. Endowment mortgages. A way to pay off an interest-only mortgage, of course. The policies underperformed, leaving shortfalls for people who swore blind. They were never advised properly or told how the endowment worked. They were promised it was guaranteed. So they paid out millions for that. And the recent one, of course, is payment protection insurance, widely missold to people who couldn't claim it or didn't even need it. And over 38 billion was paid out in compensation at the end. Now, the interest rate one, hedging products, tended to affect businesses. Sold to small SMEs without proper explanation of the risks. A friend of mine was hit by this. He had a small catering business back in just before the crash, and he was sold this product, and he's still trying to claim some money from them, but not a lot of people know about it. So face unexpected losses when interest rates fell, which they did after the crash. As you know, they went from like 6-7% all the way down to like 1 or 0.5%. Businesses were affected by that one, not consumers so much. It hasn't really hit the press. So these are some big scandals. We know about this one. Of course, we've got all sorts of results of the big scandals, but we've got a huge one coming in now, which I've talked about on the live stream a couple of times. Motor finance mis-selling. What's caused this one? Well, it's an FCA investigation, discretionary commission arrangements in car finance. What's happened is consumers may have paid more due to hidden incentives. What happens is the car salesperson was arranging the finance, because that's what they do, isn't it? They do the part exchange, they do a deal there. Now they're doing the price on the new car, and the customer wants to finance it. So the car salesman gets all the paperwork out and starts to look at what they can make from the whole transaction. Because car sales is not just about the sale of the car; it's the part exchange costs. They get money from different places, different insurances they sell as well. So it's a whole package. And if they can manipulate the interest rate so they get more commission, some of them did, when the client had no idea what was going on. Mis-selling. Potential for widespread compensation, and that's all coming through. So they want obviously fair value and transparency under Consumer Duty, and that's going through the situation right now. The FCA is making their judgment as we speak. So big one coming in. Where's this led? What's happened as a result of these? So all these scandals then have led to a lot of regulation coming in. The creation, of course, of the FSA back in 1988, and of course the FCA now, and the various other regulatory bodies have come in then to do their duty. RDR, abolition of commission, that was as a result of the pensions mis-selling and the endowment mis-selling scandal. And of course the rise of qualifications, more and better exams. Even CMAP's had an upgrade to a level 4 on CMAP 1. If you want more information, just contact me, let you know. Had an upgrade, love that phrase, don't you? A Consumer Duty, of course, came in to help customers get the better outcomes, to make it part of the way we work as well. And Senior Management Certification Regime came as well, SM and CR. On that, in a sense, brought about the right way of operating in a business environment, senior management and certification. And we've got all what we need now. The big one, of course, is Consumer Duty, which is the key one to us all. Consumer Duty principles. We've got lots and lots of rules and regulations affecting us now. Consumer Duty and FCA principles bring in the key elements of regulation. So that kind of wraps up where it's all come from and what we've now got. Of course, we've got a big one now, which actually I'm going to do next week for you to enjoy. CP25/18. Have you heard of that one? CP25/18. Great. It's not a robot from Star Wars. It's an initiative from the FCA to promote non-financial misconduct. It's all about the right culture, enforcing culture and changes coming in. So if you think about it, it's the next stage from our history. We've got this going on. We've got the current situation with mortgages and commission on sales of protection. Is there any mis-selling going on at the moment? I don't know. I don't know if there's any mis-selling. We don't know about it at the moment, do we? Is there any mis-selling on life assurance, mortgages? Possibly, we don't know. But if it's commission-led, now this new one now is going to change the culture of organisations. Ethics, of course, come into this as well. But changing the culture, non-financial mismanagement, effectively, looking at bullying, harassment, that sort of thing, is coming in. And that will change the way firms operate. So we really do have the customer at the heart of everything that we do. That's coming up. We'll talk about it more next week. So hope that's been useful.